Hey guys, it's Kyle Thompson here with My Real Estate Group, and today we're going to be doing the monthly market update for detached homes. Let's jump right into it. So first up, we'll take a look at what happened market-wide. Last month, we had 102 new listings, 76 sales. The average list price was $819,713. The average sale price was $774,488. The average days on market to sell was 54. And we ended the month with an active inventory of 321, which gave us a monthly supply of inventory of 3.75. That does technically put us into seller's market territory when you're using the monthly supply of inventory method. Jumping over to take a look at the sales to new listing ratio instead. Last month, we came in at 75%, which puts us firmly in seller's market territory. I do think that these numbers are slightly skewed due to low sales volume. The market itself is quite slow, and I wouldn't necessarily say it's favoring sellers at the moment. Now let's take a look at the inventory. Last month, new listings fell drastically, which isn't uncommon for this time of the year, but it can skew the statistics as I had just mentioned. Sales continue to trend lower for the 7th month in a row after peaking in May. The amount of expired listings to sales has been creeping up over the last few months, with last month pretty much keeping in line with what happened in October. The benchmark price did bounce slightly from $655,000 to $661,200. To keep these numbers in perspective, we'll take a look at the 10-year averages, and then we'll zoom in and take a look at it by sub-area type. So far this year, there have been 889 new single-family dwelling listings, which is about 6% down from the 10-year average of 2013. When we take a look at units sold, we see that the year continues to underperform, with year-to-date sales for detached homes coming in at 990, which is about 22% below the 10-year average of 1,271. This is the lowest amount of sales year-to-date over the last 10 years by quite a margin. High prices mixed with high interest rates continue to affect this segment of the market. Now let's zoom in for a moment and take a look at the stats by sub-area type. Please keep in mind that these numbers are comparing year-over-year numbers. Units sold are broadly down. There are a few areas that are up, but most of them are in areas that don't have a lot of sales volume to begin with. In terms of areas close to the city center with a fair amount of sales volume, only Westside, Pineview, and North Cam are up on the year. Some of the more popular areas like Dufferin, Brock, Aberdeen, Batch, Pineview, and Juniper are down between 10 and 20%, which is substantial considering last year was a bad year for units sold to begin with. Moving over to the average sale price by sub-area. Once again, numbers are down pretty well across the board, with the exception of Dallas, Valley View, Sahalee, and Heffley. In the areas that are positive, they are only slightly so, with the exception of Heffley. The average sale price in Heffley is up almost 30%, but there is low sales volume in that area, so it's easy to have big changes either way. In most of the areas close to town, prices are between flat and down 10%. Now that we've seen what's been happening with sales, let's take a look at how long it's taking properties to sell. Once again, we'll start with the 10-year average and then zoom in. So far, year to date, it's taken an average of 47 days to sell, which is right on par with the 10-year average. If we look at the month-over-month numbers in November, it took an average of 54 days to sell, which is about 5 days above the 12-month average of 49. So it is taking a bit longer to sell, but that is expected around this time of year. When we zoom in and take a look at it by sub-area type, we see that the areas that are moving the fastest are Rayleigh, Westmont, North Cam, Brock, Aberdeen, and South Cam, all with an average days on market to sell of 40 days or less, whereas areas like Monty Lake, Campbell Creek, Paul Lake, and Sun Peaks are taking the longest to sell, taking anywhere between 3 to 4 months on average. Finally, let's take a look at affordability. What I did here is I just took the benchmark price for a home last month, and then I compared it to the same thing a year prior. Then I went on to ratehub.ca and grabbed the prevailing rates at the time, threw it into a mortgage calculator to see how the affordability has changed over the past year. This is what that looks like. Over the last year, the benchmark price for a home has risen $35,900 from $625,300 to $661,200. That means in order to put a minimum down payment on a property, you need to save up an additional $4,138 compared to last year. Both fixed and variable rates have gone up over the last year, with fixed rates increasing 0.5%, whereas variables increased by 1.2%. That equates to a $369 increase had you gone with a fixed rate, or a $634 increase had you gone with a variable. That's all we have for today. I really hope that you're continuing to get some value out of these market updates. If you are, please consider liking and subscribing to my YouTube channel. And as always, if you have any input or suggestions on things that we could change or add to these market updates to make them more valuable, please feel free to leave your comments or suggestions in the comment section below, and I will get to them as soon as I'm able. Thanks for watching.